Hello and welcome back to another episode of RE Radar. Once again, I'm your host and realtor, Nathan Mathisen, and it is the start of a new month. So, you know what that means? That means it is time to check out the numbers from last month. What happened in the real estate game last month, statistic wise, and just try to wrap our heads around this market and figure out what's going on because I think it's kind of an interesting market we find ourselves in. Here in Seattle, October has hit us with some stormy, windy weather at times. And while obviously that makes homes show a little worse, it makes people a little less inclined to go out looking at a bunch of homes, spend your weekend out and about looking at homes. No, thank you. Not when the weather's like that. People would much rather just stay inside, hang out in their home, relaxing, and spending time doing activities that they like to do when the weather's horrible outside, like it's been some of these weekends. They don't want to be stressing over buying a new house or selling a home. Now, another factor is that we get to November and what comes up? Well, the holiday season is upon us. You've got Thanksgiving, Christmas, Hanukkah, Festivus, all of those good holidays coming on up. So that is also going to be a deterrent for some people, and they don't want to be spending time during the holidays looking for a home or trying to sell a home. So what I'm getting at is you would expect the real estate market to kind of see a little slowdown here. And at times, it seemed like that is what was taking place. I like to check out the new listings when I get into my office in the mornings and just see what has happened over the past 24 hours. And on some of those days, especially in West Seattle, which is where my office is out of, so I'm looking at that, I'm looking at it and seeing less than 10 actual new residential listings on some of these days. And even on Thursdays, Wednesdays, when the most new listings typically come on each week, they were surprisingly low at times. So it appeared that the market had really slowed down, especially within the last couple weeks, the end of October. It started to take a bigger decline, I feel. However, as we do look at the overall data from the entire month of October, it's actually been a little bit stronger statistically wise than some people might think, or the picture is painted in just what you're seeing on your hands-on activities. Now, looking at the numbers, let's start with the median sale price. And in Seattle, the median residential and condo sale price, it went up. So it went from 850,000 in September to 888,000 in October. That right there is the second highest month we have ever seen. Only this past June's median sale price of 910,000 was higher. So when people ask the question of how is the market, it's not really a straightforward, clear-cut answer. How the market is, it depends on a number of factors. It depends on what market you're actually talking about, because clearly with a median sale price like that, it tells me that maybe the buyers in that higher range or middle range of Seattle, that 750 to $1 million, they're still out there in Seattle. And those homes that fit that criteria, they are out there, maybe a little less than they had been 4 or 5 months ago, but they're still out there and they are still being bought and sold. Now, bear with me here as we are going to get a little detailed with some of these stats I pull up today, because really the point that I'm going to be emphasizing on this episode is all about how here in Seattle in real estate and in just any real estate market across the country, there are pockets. There are different pockets of real estate. There's, going to be that low end, there's going to be the middle market, and then there's going to be the high end market. And what I believe has happened in Seattle is that the middle market is still doing okay. It's at a place that is okay for buyers now, but it's still good for sellers. It's still a place where the sellers are doing okay. And it's a little bit of a more equal market, though, than it has been over the last few years when it's so heavily favored the sellers. So buyers have gained a little ground, but the sellers in that mid-range market are still doing okay with their negotiating. Now, the low-end market, though, is not quite at that same place. In October, Seattle saw 271 new listings between 400 and 650,000. Between 750,000 and a million, Seattle saw 328 new listings. So in that lower range then, Seattle saw 144 closed sales, and then in the mid-range, there was 185 closed sales. So as far as the homes on the market at the end of the month, in those price ranges, low end had 571 and mid-range had 586. So somewhat similar, but still a little more homes in that mid-range. And you're seeing more new listings in the mid-range, and of course then more closed sales in the mid-range. So that mid-range market is doing a little bit stronger, I feel, than the low-end market in Seattle. So if someone asks me the question of how the market is, I'm going to follow up, of course, with, what market are we actually talking about? What are you interested in? And if they say, I'm thinking of buying and can afford maybe a $500,000 home, I'd say that that market has slowed a little bit with not quite as much inventory coming on in the last couple months, but that could then give this person a little bit of an opportunity as a buyer, in that it is able to get closer to where you have more negotiating power as the buyer. So if a home is out there that they do like, there's not as many, but if there is one out there, then they will have a little negotiating power and to go out there and try to get a good deal on this home. Now, if someone were to ask me about the market and say they were thinking of selling their home and where is it? Well, it's in this great area. It's in good condition. Values are around 800,000 for this home. My answer to them would be, well, we've been seeing a little bit of a steady rise in the homes for sale and on the market in that price range. Now, though, buyer activity, it is still out there as long as the home is desirable. So closed sales level are still coming up, and they are on par with what we were seeing in July and August in that market range. But of course, I'm going to be honest always. And because of that slight increase that we've been seeing in new listings come up in September and now October, the buyers do have a little bit more power or negotiating power than they did, say, last year or the year before that. But again, the buyers are still out there. So in this particular case, when we're talking about a home in a desirable area, in good condition, valued at around that $800,000 range, I would be confident in that home garnering strong interest even in today's market, as Seattle is a real estate market that is going to continue to stay strong in terms of people wanting to be here. Now, versus this situation where it's a seller, they're looking to sell their home, but this home, it's in a much less desirable area. It's in not nearly as nice or what you would call move-in ready condition. And it's valued at around $475,000. Now, in that scenario, I would be a little less confident in that home being kind of a surefire bet in terms of getting a buyer for it right away. In what we're seeing, these lower range homes, the lower range market, it is favoring and it is leaning towards the buyers a little more strongly than, say, that mid-range market is. So just having a seller in that mid-range market, it is still going to be an option for them to get these homes out there and sell quickly, versus a seller in a lower range market. If the home's not necessarily move-in ready, it could be a little more difficult to move that property, as the buyers simply have a little more negotiating power and can get what they want a little more easily at that price point. Looking at that stat in particular, we can pull up the month supply closed data. And in that low range, what we see it at is 4 months. And then when you get into the mid-range price, it then goes down to 3.4 months for October. And then in the high range, million to 1.25 million, it's actually at 2.8 months. Now that, of course, is how long it takes for the entire inventory on the market currently to be sold off at this rate. Now the low range has been right around 4 months since this past May. So it's been sticking strong right in that area, being consistent. The mid-range, it actually recently increased. The last couple months, it jumped up after being more 3 flat from May until August. Before September, what did September? It jumped to 3.3 and then 3.4 in October, as September actually saw a pretty big spike in new listings and listings coming on compared to what we saw in August. And then October was a little down from September, but still up from August. And new listings, they had actually been decreasing every single month since May, before a spike happened in September, and then October kept up above August as well. So that led to the little bump then in month supply inventory, giving buyers a little more power just in the last month compared to where they were at 3 months ago. Now it still, though, is seen as a seller's market. An even market can be seen when it gets more like 4 to 5 months range, and then a true buyer's market is not till 6+ months of supply inventory, which that has not happened in Seattle since 2011. So, what I'd say, just to sum this all up, is buyers have gotten a little more power over the past year, and especially over the past month or two in real estate in Seattle. And in that lower range market, they have experienced that a little more or just a little stronger. One last stat to quickly show that I want to touch on is actually the days on market. And that low range has 21 days on market median. The mid range has 14, and the high range is 6. So again, buyers overall have made progress in terms of gaining leverage over sellers. But for the sellers in that mid range and high range of the Seattle market, you still are in a good spot. So as long as your home is in that good area, in that good condition, there is going to be a buyer out there for you. And as we see with the median sold prices in Seattle, they're staying strong and not collapsing. But again, just because of prices not collapsing and the prices being strong, it does not mean you can start overpricing your listings. Pricing is still super, super important, maybe more so now than ever before, in that if you miss the price right away, if you overlist a property, even if it is that good property, people are going to be a little bit less likely to go all in on that, as what we've seen is buyers, there's more inventory that's sitting a little bit, so there's more options for them. So if you do miss the price, it can be costly. So be very particular when you're pricing a home, very careful, look around the market, look around that neighborhood to see what's going on, and try to price it at a point that is going to garner some interest and get some eyeballs on that property. Because again, when you get people looking at a property, when you get people in a house, if that house is in good condition, if it's nice, then the buyer might very well go for it. So as long as it's priced where it's going to get people attracted to it, get people in the door, then you could be set up very nicely in that mid-range market. So every situation, of course, is different. And when I'm doing a podcast like this, I have to be pretty general and a little broader than I'd like to be at times. So if you are, though, curious about your specific situation, shoot me a message and I would be happy to sit down and talk with you through an analysis of your home and your specific situation to figure out what would be best for you. But until then, this has been RE Radar's Market Update for October. I'm Nathan Mathisen. Thank you for watching. Thank you for listening. Till next time, peace.